This region around the Great Lakes has been called the heartland. When it comes to agriculture, there's hardly an area in the world that compares.
Everybody, just hold on. I don't know what we're going to have here.
There's a lot of self-proclaimed geniuses out there that know the national yield, but they're all wrong.
Managed money, piling in.
Double digits higher.
So at this point, we're in kind of uncharted territory.
There's a lot of money on the sidelines.
So that was a crazy one.
That's what brings the viewers back. That a boy.
Good morning, everybody. It's Thursday, June 18th, and this is the AgYield War Room. I'm Dan Dempsey, and I'll be moderating today's session. As always, if you get any questions or comments, please feel free to drop us a line in the chat area. I'll be sure to get to it during the show. Overnight markets here, July corn down 2.5 at 418.5. July soybeans around 7 3/4 at 1124 1/4. And July Chicago wheat was down 2 3/4 at 610. This morning we had a couple of export sales announcements here. 132,000 metric tons of soybeans to China. That was for 26 new crop. 285,775 metric tons of corn to Mexico, also for new crop 26. And lastly, 120,000 metric tons of soybeans to unknown destinations, also for 26. Weekly export sales out here this morning. Another solid week for corn. Old crop corn, 1,157,100. That was the upper end of the range there. New crop, 519,000. Sort of towards the lower end of what was expected, but still solid. On the soybean side, 424,900 for old crop. That was above the top end of the range. And right in the middle for new crop beans, 304,100. On the wheat side, pretty average, 400,800. Old crop meal was toward the lower end of the range, 283,900. We sold a little bit of new crop meal, 120,200. And on the oil side, 2,200 for old crop, nothing on the new crop. Good morning, guys. Today is the last day of the week. We will be closed tomorrow and reopen there on Sunday night. Dustin, as we kick off here this morning, we got, areas getting quite a bit of water through the upper to central Midwest. Systems moving through here again this morning. One thing I saw this morning also, post-Fed yesterday, dollar strength back above 100 could have contributed a little bit to some of our overnight weakness that we saw here into this morning. So I guess maybe share a few thoughts as we wrap up the week, and then we'll throw around the room.
Yeah, thanks, Dan. Yeah, the first Fed chair meeting for Warsh was yesterday. And, I think a lot of people have been expecting them to come right out of the gate and talk about, cutting interest rates. We know that President Trump has expressed interest in that. And that was Warsh's thesis as well, too, that rates really did need to come down. But we didn't really get that yesterday. It was more of a hawkish tone almost. It was the stability is what they're looking for. And right away we saw some flattening of the curve and dollar strength. So if we want to pull up the dollar chart, Gavin, that's the weekly chart. So it's the highest we've been really in quite a while. We're kind of topping, the highs that we've had for 2026 and going well back into that, early 2025 time period for the dollar basket. When it comes to this, this is definitely a good, if you were to just go long-term and take a basket of corn, wheat, and beans versus the dollar, you will see the inverse correlation, right? Commodities are dollar denominated, and, how much that impacts the rest of the world's consumption is high. If our basket is strong, that means that, it's more expensive for, in relative terms, what other people are spending around the world for dollar denominated assets in their own currencies. You look at something like the Riel, though. I don't have a chart up of that right now, but the Riel, I think, was a big part of that bear market in 2024. They were seeing extreme weakness against the dollar. And really, when you're talking about an export competitor like Brazil, how that bushel flows when they're getting, a 20% boost in the returns that they're getting in their local currency when they go to sell that, commodity on a dollar-based system. They were more competitive, and we were left with larger carryouts during that time frame. we've since recovered a lot of that, and I think that helps explain some of the just the underlying strength that we've had in flat price while the spreads have remained wide in recent months, right? Not right now, but certainly, for much of 2026, that strong real, I think, was helping our tailwind, even with wide spreads. And we're starting to see on this uptick of the dollar a little bit more weakness in the real. So we were up above 20, and we're down to the 1940s again. And that's probably the biggest thing. I mean, we haven't really ruined the uptrend yet from what the chart looks like. But if we were to see the emerging market economies and the real in particular go back down to touch the lows, that's probably one of the bigger risks we have as U.S. farmers for what we receive for a flat price, because that goes back into an area where they're more easily undercutting us on the competition. So we'll be watching that. Back to U.S. weather, anecdotally I've heard a lot of growers, especially in Iowa, talk about how it's too much rain, and the top end has been taken off. And again, this is just anecdotal, so I'm not suggesting we're going to be below trend line yield at all, but Missouri, Iowa have heard a lot of this so far. So in addition to that, I mean, it's just the timing of the year. It's not like rain makes grain, and I agree with that. But it's been a lot of early June that we've had too much rain. We still have to see what July is like. The 2-week forecast looks fine. We go to some of the extended forecasts, and still a question on whether or not we're going to easily be above that trend line yield that we kind of need to have, at the acres we're at and the demand we're projected with China. So this sell-off that we've had, we talked about it ad nauseum here in the last couple, but a lot of that was being built by new shorts from the hedge fund managed money crowd. If we end up getting that situation where they're building a large short, and then there is some sort of a catalyst, like we get to that July 4th forecast, and all of a sudden all of this rain kind of shuts off and it turns hot and dry again right during the pollination window. Yeah, I think there is a little concern with the positions that have been built as they stand right now, that we're just going to see a lot of volatility both ways, right? If they're right, they're building shorts, they're going to stay with them if weather's good, markets go down. If there's some reason that they have to bail, there's actually a position to bail out of right now. So we'll see. I think it's like always, you're curious to see what summer weather is going to finish out to be, but right now the stakes are starting to grow again.
Good stuff. Ben, what's on your mind this morning?
I think until we get to that report at the end of the month, I think we've set our range for June. 406, 436, and would love to see 436 July, 430 above there. And I think that the potential for all that to change on the report is there. We've noticed in the last couple of days, volatility after getting beat up on the break starts to creep higher. Reluctance of people wanting to sell before some big events. So I don't see a lot right here, right now. Sideways, choppy trade. I would be shocked if we went into the report near our lows or below where we're at. So, day before a long weekend, I don't expect a lot in the short term. But I'm with Dustin. I think that later on, the potential for markets to get volatile, not just from U.S. weather. I don't want to sound like the tinfoil hat guy, but if you're following the narrative on Super El Nino, which may or may not materialize, there are some things right now that are happening that would be reflective of that, which is in a very wet Midwest for the growing season. It's been very, very hot in Europe. And as we get into Southern Hemisphere crops, if that is in effect, I think that we're going to be seeing a lot of things that are going on globally that could be detrimental to grain production. And the world has gotten very comfortable with 2 crops per year, maybe call it 2.5 with Safrina. But I think that starts to become a really interesting period if if that were to stay or manifest itself, if you don't think it's here yet. But there are some early signs that it is in fact moving in that direction.
We were talking before the show, and Dustin kind of alluded to it a little bit, but we did get the first Fed announcement yesterday with the new Fed chairman. And Jason, I thought you made a good point. You know, some of the things they're changing at the Fed as we go forward with regard to forward guidance and things of that nature are going to be interesting to see. You know, how this market reacts and trades. It seems like they're setting a path for a different environment than we've become accustomed to with regard to forward guidance. Maybe share a few thoughts there.
Yeah, I didn't catch too much of it. I caught some of the highlights. I've listened to a couple other people speak about what he was talking about, and yeah, he kind of dropped forward guidance, and the market yesterday, at least the stock market, kind of traded quite a bit lower. I think it could end up being a positive, and his methodology or his thought is that they're going to go on real-time data, right? They're going to try to modernize and say, we're not going to give a forward guidance, because I think the issue was at the Fed is they would give a forward guidance and then they would try to stick to that. And then so their pace of change was delayed, right? And they wanted to, I don't know if be right's the right thing, right? But they wanted to slow play any new data. And I think, you know, he's trying to modernize the Fed so that they can act on real-time data and make decisions on current market conditions. So I think it's a good thing. So we'll see. But, you know, I think, you know, me and Dustin were talking about this. I think we kind of agree that, you know, he sees inflation as a problem and he wants to address it. He sees it as a monetary issue, which it is. But he also sees there's a path to, you know, to this AI revolution, this AI boom of productivity as a deflationary thing that could, you know, affect a lot of things, right? Affect productivity and affect inflation and bring down inflation. And he doesn't want to stifle that productivity growth, right? So I think Trump made a great Fed choice. So we'll see. Hopefully he, you know, he kind of keeps to that that reputation anyway. So as far as grains, yeah, I kind of agree. There's no threat to weather. If anything, I mean, you know, soil moisture, when you look across the Midwest, has really been at a deficit until recently, right? And this forecast, it just has rain across the entire growing region. For the next couple of weeks, there's no threat from weather. Yeah, there's going to be spots that are too wet. We've heard from clients it can be frustrating, but when you look at the big picture, you know, it's not. I wouldn't say it's bullish by any means, but we've already priced in. You know, I would say we've taken a lot of any kind of weather premium out of the market, so I wouldn't say it's necessarily going to drive prices extremely lower. You know, wheat acts the best. I mean, you look at wheat. Closed above the 100-day yesterday, so we'll see. Beans kind of failed, right? You know, bounced and has failed a couple times at the 200-day. Corn's got a long way to go back up to being, you know, at any kind of resistance levels. So hopefully we start to see that. But so,
very good.
Yeah.
All right. Well, Ryland, we got a couple minutes here. I'm going to move to livestock real quick. Cattle took a little breather yesterday. We got cattle on feed here, 2:00 Central. That'll be out this afternoon. And then pork cutout continues to struggle, and that poor market needs a little something. So why don't you share a few thoughts as we wrap up the week?
Yeah, absolutely. I mean, definitely a two-sided session in cattle yesterday. I mean, it just seems like everybody's waiting on the same thing. I mean, we saw asking prices on the live side of the market for cash 258 to, you know, 261. So it just feels like we're waiting to see if this thing's going to hold up okay, especially with the small discount here on the board. But, you know, there's always a little bit of caution here before these reports, especially with all eyes on placements. There's usually there's a pretty wide range of estimates right now, especially on the high side of the market, or high side of estimates at, you know, right around 104. So, you know, I think you get a lot of repositioning before that, a little bit of caution. It's the reason why they call it the cattle on fade report. So even if you get some bad news on it, you're likely to see cash markets still kind of lead the charge here. So I think that's a lot of what's going to go on today. And all eyes are there. Obviously, choice market has been really strong, kind of leading into yesterday. We were up $5 the day before and then down $5 the next day. So it just feels like that little boost we were hoping to get from the beef kind of petered out here yesterday. So I think right now you got a little bit of caution here on the cash front as well on that side. So we'll see what the numbers say. We'll see and we'll see at what potential market reaction could come here as we get into Monday, just because we're closed tomorrow. And then hogs, just needs something here. I mean, obviously, carcass has just been getting decimated. Ham market has definitely been kind of lackluster. Bellies lackluster, but we did see a $4.60 increase in bellies yesterday. It just feels like something's missing here from the demand side, especially as we come into this year. And obviously, China May imports were down about 30% year over year. So it does feel like we're missing some of the demand sentiment that we have just from our export book right now. So overall, it just feels like we are pretty oversold to some degree, but there's just nothing for the market to be excited about fundamentally at this point. So I think it's just going to be more of the same right now. Back end starting to get a lot more attention just because there has been no real movement in cash and carcass. Cash was up 18 cents yesterday at 97.75. So we're still just kind of flatlined as far as cash goes. So it would be nice to see something in the news to kind of bring us out. But otherwise, we know managed money short continues to press the short side of the market, and there's not a lot of pressure for them to get out.
Very good. Appreciate the update. Just came into the open. We got July corn down 3 at 4.17 3/4 is the last. July soybeans are down 7 and down 8 1/4 now. 11.24 is the last there. And July Chicago wheat down 3 3/4 at 6.09. Again, markets will be closed tomorrow and will reopen Sunday night, 7:00 Central. So if you've need anything, let us know. Get in touch with us there. Also, you'll notice in the link in the description, check out the War Room Report. Opens up premium content for you, gives you a deeper dive into all things that we discuss here on the War Room, as well as reactions to USDA reports and special news items that we'll put out there on a daily basis. Also, a portion of those subscription fees goes directly to support the AgYield NextGen Foundation, which of course puts on our national scholarship competition. We've got 5 very deserving winners this year that we'll be honoring here in July. So we're real excited about that. Check it out. We appreciate everybody that tunes in on a daily basis. If you wouldn't mind, throw us a like and certainly subscribe. We're doing this every day that the markets are open on X, Facebook Live, and YouTube Live at 8:15 Central Time. Fellas, everybody, have a great Father's Day, as well as to our loyal followers. Hope everybody enjoys the weekend, has a great Father's Day there. And we will see you again on Monday morning. Have a great weekend.
The War Room is presented by AgYield, a risk management partner of American grain farmers for over 50 years. Looking for more in-depth analysis? Check out the War Room Report. Our team's knowledge and expertise delivered straight to your inbox every weekday. Each report delivers key market-moving headlines, critical weather updates, USDA report breakdowns, and exclusive video content. All for $50 a month. And most importantly, 10% of every subscription will go directly to support the AgYield NextGen Foundation, a nonprofit investing in agricultural education and the future of farming. To sign up for the War Room Report, check out the link in the description or learn more at agyield.com.
Hey guys, Jack here. Be sure to support the show by hitting the like button, leaving us a comment, and subscribing to the channel for all the latest updates. Thanks for watching. We'll see you next time.